Greetings, market rebels, and welcome to this week's sector situation. It's actually April 8th here. It's Saturday. It's about 3:30 on the East Coast, and just getting this done in advance of the weekend holidays. Let's get our trusty disclaimer flash for everyone. I think I've got the right share going. Let's make sure we're getting the right share here. And we are. Just wanted to double check on that. Trusty disclaimer, and then we need to flash our trusty intellectual property rights notice. If you would please memorize that for us. Thank you very much. And then we are going to flash this week's stream, and by stream I mean all the things I jump around and try to cover in macro measure. So just including this, if you want to get some commentary about that, just some thoughts and some observations, that's what I covered in my way of doing it, I guess, in macro measure. But this is the big stuff. We're going to switch over now to a view. So just bear with me. We'll switch over to a different view. So let's get that started. And that would be screen 4 in this case. And we should be on our grid of 12 that we usually sometimes start with. But, this is getting just like the market really this year with all these different developments that have been coming at us. It's not been easy to sort out really anything. And we've been preaching the singles and maybe a double here or there kind of mantra, using the baseball parlance to tell folks what we think in terms of going for profitability. You can get scratch out a lot of little singles, but tough to get home runs and triples, certainly in a market that doesn't sustain trends for very long. And I think there's been more narrowing of leadership. I think the market breadth, that stuff that I typically take a look at and did this week in macro measure, that started to roll over. So after a nice surge into into more of a bullish posture or complexion, and now that's rolling over again. Don't know if it's just a short-term blip, of course, or a bigger deal, but really we know from before that XLI and XLB, they were doing very well and holding really strong until very recently, until March. And then they've really not been able to fully regain their mojo. Now, some mega cap stocks have. We noted that in macro measure. We thought that was important this week. But these sectors, which were sort of leading, they're still a little ways from where they were. So don't know if they'll be able to re-energize and go. There certainly still could be more to a bull trap, or a second round of bull trap, or a second leg that really would bring a lot of people in and convince a lot of people to cry uncle and give up. Maybe if there is another leg up like that, and it could be legit ultimately as well too, maybe these then get the bid back and we see them start to move back up. But for now, they're both flashing low or high, with sort of like a middling RSI reading. So of course they could do anything, much like with XLE, where it was not really flashing all that much in terms of good stuff. And then, of course, the Saudi announcement came out. But I'm mentioning that because these were former leaders, and we could see Staples sort of remain somewhat of a leader. They've come back for those. Now, that's obviously a little defensive, whereas XLY is the discretionary. And so that didn't act nearly as well. So it's still more of a defensive posture situation. It seems like in the markets to this point, that might be, I guess you would say, bolstered here by taking a look at XLU, which maybe is being benefited by the belief that rates may go up a little bit still, but then they're going to be on their way down shortly thereafter and for a while. So maybe that's part of it. Maybe this is also just the safety trade, reaching for safety. XLV, healthcare, reaching for safety. Things like the financials, that we talk about a lot. And just kind of expand this. Not out of the woods yet, We need to see more of a comeback to start feeling a little bit better. Could happen, but I still have yet to see that big pop where they really say, okay, that's behind us now. Jamie Dimon's making comments that he thinks it's mostly behind us. Don't know if you can trust that. He would certainly know more about the situation than I would, but we're talking Wall Street here, so it is what it is. But when these don't look all that great, transports, these don't look all that great. Energy kind of used that news to look better, but it wasn't looking great. So it's a little bit of a mixed bag, like we talked about Austin Powers and the other video in Macro Measure. And so it's not super convincing that, hey, everything's wonderful. Certainly real estate does not look wonderful either. And when we look at these other two, these have been the big, these have been the big things really keeping things levitated, elevated, or from rolling over in a bigger way. And so they did turn those around. You could see that XLC and XLK got turned around, and clearly, like you could see that in the Qs, of course. So you've got some interesting things developing. It just doesn't make it easy. This could very well, right? If let's just do a tiny bit of work here on XLRE, and we'll drop a line in here. It's overdue. I think a line right there would be reasonable. And now I don't even need to put another line because it's past there, but right, we can see there's probably another line there in terms of flat lines. So I'll just put that in there just to help us out a little bit while we look at this one a little bit more. Probably right about that. Oops. Help me here. Come on, mouse. Right about there is probably fair. I mean, it gets, oops, didn't keep it for some reason. I thought I double clicked. Maybe I didn't. Come on. A little bit higher than I wanted it to be, but regardless, this could break out a little bit, right, if it gets above there, but you still need to do a little work there. I still feel like that's going to be hard. That's still going to be hard to happen in my mind, just because it's going to take a while for rates to be worked down. And by the time they do get worked down, there could be a lot more economic fallout that's not very good, is my take on it. And that might sour things, further before we start to see a bottom. But I think a lot of bulls right now are front running this interest rate cycle and trying to front run that scenario. And it may turn out to be a smart move, or they could be premature, and they're the ones that may end up with arrows in their backs. But for now, it's worked. As you can see, a lot of sectors, the defensive sector of XLP, that's close to overbought. Communications, close to overbought. Technology, getting closer than most. Healthcare, because it went haywire to the upside, another defensive one, getting close to overbought. The rest of them, not so much, right? So they're not so much. But I would say that we have to, what I would draw from all this is that until we start to see a really stronger move back, we can't really just assume, despite what the VIX is saying, that this banking issue is completely over. I still would wait to see a better retracement than what we've seen so far. If we see that, maybe that's going to give us confirmation. I think it's clear to me that these bigger names in the Qs and some of the very top names, and of course in SPY, are the ones that they're going to be using, or at least it seems like they'll be the ones that they're using to keep things elevated. But other things are a little concerning. So let's take a look at lumber and the housing market, and I'll get off of this annoying percentage flip over that Thinkorswim keeps doing to me. But if you look at that one, right, could you say it's still in a long-term uptrend if I gave it a little more time? Might be able to make that case. I mean, I don't really feel great about that long-term uptrend, but you could say, well, maybe it is. I kind of feel like it lost its trend there. It's more in a corrective mode at this point, and it really only has the longer-term moving averages down here, which are still upsloping, but they're not really doing so right with any gusto because of this corrective activity. So the way that it finished in a market that finished strong, that doesn't really look that encouraging to me. And by the way, the Fed, the jobs report seems to have really shifted the probabilities for the next Fed meeting, that we now went from about 50-50 with a 0.25 basis point raise to about 71% that we get another 0.25 to the upside from the Fed next time around. So that wouldn't seem to be good news for this sector. And lumber, which we sometimes struggle to chart, but we may as well cover that here. Usually we get LBS. I wonder why it's not giving it to me. I want to get the right one. That's not the right one. LBS. No, I hope Thinkorswim's not down. Sometimes on holidays they have an issue. It's really kind of strange. Normally it populates that, but it's not working right now. So let's see if I can get this data to come in. But it's not like this is anything terrible. It's off the lows, but maybe it'll bounce from this level, like we said before. We said this pretty much last week, and it got down to a level where maybe it could put a bounce together. But just looking at this and looking at XHB, I don't think they look all that great. Now, again, it switched me over on percentages. I might have to just live with that if that's what it's going to keep forcing me to do. But that's a good sign. It's better than going down or making new lows. But nothing special there. You're still way, way, way off from where you were previously. So it is what it is. So that's kind of indicative of that. Something that looks interesting is some folks will jump to this that sort of related, right, with 20-year treasuries. This is interesting in that we've been seeing some more bullish paper crop up, and this is right near a pretty important high level. So if it can break through here, right, it might be able to finally pull off the trend change. I mean, this trend has been there for, let's see if I can get, this has been in place for a while, right, that we topped out here in TLT and been going down for the most part for a while. So this could allow it to try to put a better bounce together. It could be on the cusp of doing that. So that might be something to keep an eye on that I came across in my travels of looking at things. But overall, just the way things are, we did look at this in macro measure, but the way things are on the 10-year, that's been coming off, I guess, right, there's a little bit of a safety trade there. Got the percentages are getting me again. But that looks vulnerable to continue to drop lower. And that and the dollar were very overbought a while back. And luckily, I say this almost every time, but luckily we kind of paid attention to that and weren't surprised that they finally started to hit a wall a little bit there and have corrected. But short term, right, you would say, oh, maybe it's overdone. But overall, right, you can really see this is making a new low and still coming off. So that's interesting in that people are maybe still moving into that space, and that's bringing yields down. Maybe they're just convinced that they'd rather be in something safe that's getting a yield relative to other things right now. So that's normally what happens, right, if you're going into a defensive situation. But that's part of the coverage we'll have there. Let's try to fix our axis in terms of percentages again. Let's look at, we don't think much right now of the housing situation. Lumber kind of a little dormant. It's just sort of like what you'd expect. Let's take a look at the oil futures. Now they are going to look, I think, a lot like when we look at, forget about it, I'm going to just have to live with Thinkorswim just keeps insisting on changing this on me at every step of the way. But that Saudi news clearly had some really a big impact, as you would expect it to. So now you have to see, right, is it able to hold on here above what would be barely above what would apparently be a support level, you would think, kind of flatline support near here, and can it go higher? And we'll see. Clearly, if it starts to fill the gap, that could be a short-term trading opportunity that it starts backing up. Maybe it will want to fill the gap first before truly turning and going for a longer ride to the upside. We'll have to see. But that and the XLE, they pretty much reacted as you would expect them to. So not really anything super overbought, because after that initial pop, they did bring them back a little. You could see the XLEs on the 50-day there in gold. And so that'll obviously, that and that low from last week are the big ones to watch if there's going to be more corrective activity there. probably keeping your eye on the 100, even though you may not want to get in just then. But if it takes out the 100 in a really buoyant market, that could maybe be a good signal that this downtrending action, that corrective action, has run its course, and that they're going to try to work it back up for more. So that's another big sector, of course, that we talk about. We should talk about KRE, because we did see the XLF view quickly, but this is what I mean about the banks. They're just not getting out of their own way yet. There hasn't been really a convincing rally that would say, okay, that they're going to really move this back up. Maybe what they're doing is, with last week's action, right, is they're retesting the level, and maybe they're seeing if there are still a lot of sellers there. And if there aren't, maybe they'll be able to sense that we can move this back up and take a lot of what we've been buying and distribute it at higher levels. So keep an eye on that. But we can get really aggressive with a trend line in here if you want to be that player that gets in. And for all we know, right, there's something cooking behind the scenes, or the Fed's ready to ramp this, that, or the other thing up. That's why it can be hard to be a bear in these things at times, when you know that they're likely to throw a lot at you before the eventuality of it getting rocked finally plays out. And that's, again, why, for me at least, it's tough to be a bear. And I mean, in terms of trading, it's just easier to be in a bull market, in my opinion, when it comes to trading, than trading through bear markets. You can be right and just have to get absolutely put through the ringer before you can collect. It could take a lot longer than you would expect it to. But yeah, I mean, this is just not impressive enough. I don't see anything wonderful there. Is it oversold? Yeah, I got to say it's oversold. I'll say that. It's oversold on the daily and weekly, or at least close to it. So it could bounce. But you really want to see it do a little bit more than what it's been able to do. I mean, look how precipitous the decline has been, right? So that's kind of a view on that that I would share, that that you just don't feel it. Another thing that became interesting too, while we're looking at, let's remind ourselves about XLV, which really had a day, had a week, had a day, as they say, had a week too, when you add it all up. But XBI, I thought this was interesting. I could maybe share with everyone this week that maybe this is one to keep an eye on. If they get everything going again, by that I mean they get the upside juicing going. This is, Thinkorswim is really fighting with me here. I apologize, but this is crazy Thinkorswim activity. But this thing, we were in this rectangle, this consolidation for a while. We've been watching that. We haven't really charted it every week. Finally, it broke down made a new low, broke down to a new low level, I should say, made a new low, recent low at least. And now it's trying to regroup at another, kind of probably in another rectangle beneath there. But after this decline, this could be an area where maybe there's a nice little bounce back up towards these declining SMAs. That could be something that happens if there is a market-wide squeeze. And of course, that would spill over into here, what you would think, to some degree. And if it does, that's what I look for. That could maybe go. So just maybe one to set an alert on, to get maybe towards like 77.75, and then see if it can break out from there. But that would be a little in front of where it would be breaking out from, at least for starters. But that was a little bit better. I mean, that has not looked good. I think that things look a little bit better technically, cyclically, right? A little bit more strength in there, and it would start to turn a little bit more bullish, where the bulls would, instead of having just weak or a faint grasp on the action, they would be able to get a little respectable grasp on some of the time cycles, which could help out a lot. So that's something I did come across that I wanted to share. That's a little different this week. We did take a look at lumber. We took a look at crude. Let's take a look at the copper, which I kept thinking, I had gold on my brain last week and kept bringing up AG instead of HG. But here's the copper view, and you could sort of see consolidation still. Could go either way, clearly, right, with the triangle sort of in place there. So I don't really have a strong sense of anything here. All the SMAs are all bunched up. The level we're at is 4. The Thinkorswim percentages are just overbearing this week. I don't know why that happens sometimes, and then sometimes it doesn't. Seems like in sector situation, it happens a lot for some reason. But anyway, this could clearly go either way. You have to say the intermediate is probably still okay. We can give it the benefit of the doubt. It sort of did crack that support line, but overall, this look is still up. This is kind of a corrective complexion for the last several months, and we'll see what happens. But I think clearly, if no one's trading this. I don't think that from market rebels, that is, but you could see where you would be looking for it. I think cracking below the 200 there is a big deal. How that would be essentially a sign of just the weakness that we think is coming, confirmation of that in my mind. And then about this would be the surprise if they're able to start moving this back up through that, let's call it 410-ish, 411 level. But nothing great happening there, just what you'd expect there to be in a market like that. And just when it makes its bigger moves, though, that could be shifting outlooks. The other thing we should definitely look at, though, is XAU. XAU this is one where I've had to put ideas in that are full of warnings, because the relentless rise of XAU and the associated names over the last, say, month has been remarkable, right? It's something that, wow, they're coming in virtually all the time for it. We keep seeing ostensibly very bullish UOA, and I think it's gotten ahead of itself in normal terms, but with a 78 reading on the 4-hour RSI. The problem is, right, that this is probably not a normal time that we're in right now, and this is acting like it's not a normal time. And so you would just wonder, well, what exactly is going on? It could be so many things. We've talked about the cup and handle that is in here. There's multiple cup and handles that are ostensibly bullish. There's one. We'll kind of leave it at that for now. But you can find this in GLD, SLV. It's all there. In fact, let's just bring up the SLV. A lot of people like to trade that when they think of. Now, remember, this is not the one that's backed by physical. So you have to. It might be a good trader for you, but be careful of that. Now, the other thing you get to be careful for is that you can't call away physical from this. You can only trade out of it, or believe cash settle or whatever. But hey, this is good, right? You cleared out these highs. It's been a very strong push to get to where we are. That's been relentless. These are usually good things that you want to see. Higher high, technically speaking, higher low, technically speaking, after kind of putting this cluster of lows together. That all looks good, and you're breaking this downtrend line that we've had in place. So this is on the weekly view. So this looks good. I'm thinking it works its way up about there. There's my 100 projection that I'm working with for now, and that would kind of put you at a level where it's hit a wall at times. It's been support and been resistance nearby there. So all that makes sense, but you just got to be careful that you might not just be short-term overbought. You have to watch for that false breakout, and it could be a case where you get the false breakout and they pull it back and they then bounce it off of former resistance, convert it to support, and then try to go. So that's why this game isn't easy, because the path is so important that things take. And as people say, the timing is everything. But the only way you can really get great timing all the time is by being a great position manager. And if you're not getting that follow through, then you might want to just neutralize your delta risk and then wait and see if it can regain its mojo. And if it can't, right, then you just keep your hedge on. And if it does, then you have to unhedge it, but that's where your dynamic management comes in. Not easy, a lot easier said than done, as are so many things. But you can see the cup and handle. There's a bigger picture cup and handle. I may as well flash that here. I don't want to flash it on all of them, because I really want to make this an economical version of the sector situation, something that's really a stretch for me, because I'm not economical. I'm more about thoroughness. I almost can't fix that. But you can see that kind of bigger picture one there. And that's really showing up across this whole space, that you just see these bullish patterns. And I'm not strictly a pattern person, but I do believe patterns are important, and they do play out a lot. The good ones do anyway, not all. There's some I think that are higher probability than others, and cup and handles in my mind have a good track record. But just to be thorough, GLD, I mean, you could see this too. This has a similar look. It's a little stretched, as I said. It's flashing 69 on the daily, 69 on the weekly chart on the RSI. So that's pretty high, right? That your weekly chart's that high. So you've got to be cognizant of that. You just don't want to go full bore unless you know that there's some sort of a news or macro driver that the market hasn't been paying attention to, and you think it will be paying closer attention to soon. Now, that could be a huge difference maker, right? Where you would say, well, I can't handle this like normal trading conditions. And frankly, I try to remind all of us, every time that the precious metals and oil, the energy space can be tough. They're tough to trade because of news that can come at you in so many different ways. So it can be good, it can be bad. So just keep that in mind. They're just not easy traders, and you've got to be, I really think, even more disciplined in those. And then finally, I think we'll take a look at SMH and the VIX, and then we'll kind of close things out, because I don't think we're in a market quite yet where we can say, hey, this former winner's been correcting and now they seem to be rotating here. That was the whole reason why we were all about getting sector situation developed, which was due during the tail end, I think, or unfortunately just after the bull market. But we really wanted to be able to find the sectors that really were starting to work and share that, because that's part of what we do. But right, it's been a lot of risk off, risk on. So where everything's up or down, and right now, I don't know. It may be a great time in retrospect, but it just doesn't feel like a great time yet to start thinking about things in those terms. But here's SMH. It's done incredibly well. I mean, we did note, of course, that it was a little overdone last week. It was getting out towards the Bollinger Bands. It's been this real source of strength for the tech space and the market, but this didn't participate so much in a positive way. Now, it did string together a close above the light blue 20 SMA after being under pressure. But there is news out in the form of Samsung. I believe Samsung announced that they're reducing their production. They're actually cutting their production. So that seems like an issue, right? You would think. We'll see, but after the way they priced this and how far then stronger they ran it back, and look, it made a new high. Now this would normally be a pretty good sign. I could be wrong, but I don't think that semis are. Oops, I'm just trying to get us a little more. Let's see if I'm right about. Yeah, they're not past the equivalent part in the market, but they do have this inverted compound head and shoulders in place that they're trying to work with. And they're not past another peak. I was thinking they might have been past one of these peaks with what they did, but they didn't get past some of the higher peaks in 22. And that may be where they're trying to target. But this is, to me, like that is not an easy look right there to chart or trade off of, because you're still in a corrective mode, I think, versus of this downtrending action in some ways, but you've done a lot of really strong work in other ways. And in the intermediate term, you're rising, but in the short term, right, you started falling pretty significantly. And you seem to have put in kind of like a negative RSI situation where you had higher highs, RSI divergence, and similar RSI. So sort of like slight divergence there. And that's normally not a good thing, but it has pulled back. The 50 is right there. I mean, I guess what we'd have to say at this point is the 50 becomes a big deal. And the 50 being a big deal is normally the case. But in this case, it's a bigger deal because there's a lot of space between the 50 and 100, the next rising SMA. And that 50 dovetails with what's clearly a flat line near about 247 that I've got in bright white and solid. So that's a big level. And so if that gets cracked, right, that would be a sign. But yeah, you could see the momentum readings were not as strong on the second pop. It wasn't able to really generate anything more, got to the Bollinger Band, and then it's pausing or pulling back as they often do once they get out near or outside the bands. Excuse me. But this will probably need to find itself if they're really going to put things together. And what I would suggest, even though this is sector situation, is to really look at some of the bigger names like Apple and Microsoft and just see how they finished out very strongly overall, right? They're barely off the highs where they made a new high. Things like this, go through your biggest names or just watch us do that in macro measure. And that's what I think if they're not going to let these go down, it's going to keep things buoyed just because of all the weightings that we talk about all the time. And then on top of that, right, the VIX doesn't seem impressed. So the dollar's sort of been declining, yields continue to go down, the VIX continues to go down. And this is more of a macro measure thing, but we'll slide it in here in sector situation because, right, this is important in the sense that, and you can come into Phoenix Portfolio webinar to check it out and maybe take a trial if you want to get deeper and ask Ryan a lot of questions about ways to hedge and how you can hedge with some, we think, some smart ways for later on this year if you think that things are going to get rough again at some point. And those hedges can, when things get this cheap, I like to normally wait on mine until I really feel like it's time. But I'm so busy every single day and even over the weekends that I just decided that I don't want to get caught up in a flurry and then miss my opportunity. So I started positioning myself a little bit, and I want my hedges, right? These are hedges. These are downside hedges where I think I'm getting a good deal on volatility in the outer months because look at where the VIX is right now. So that's how I'm feeling about it. And honestly, I hope to lose on them. And that's really what I hope to do. I hope that it was unnecessary insurance against the rest of my stuff, as they say, right? The rest of the stuff that I'm long, and that the market recovers and ends up having a really good year. That's really what I'm hoping for. But in the case where it doesn't do that, right, I feel like I've got partial hedges at this stage, which I will add to, but I want to do it. I'm hoping that this earnings season makes things even rougher for the VIX. I hope the VIX takes out the 23 and 22 low in a convincing way, and we're even down towards 16, 17 by the time the gang has wreaked havoc on bears. I'm not cheering against anybody. I'm just selfishly saying that I would love to load up on volatility at an even cheaper level than it is right now and position myself for the second half. Now, you would say, well, isn't that fighting the presidential election cycle that we talk about in macro measure? And it is. Frankly, it really is. But remember, the after May, the summer is not often that wonderful to begin with. And there could just be enough fireworks after we get through May, even in the bullish scenario, where I'm able to maybe bank some money, and then with my adjustments and my additions, and then I roll out maybe a little bit further, and then I go from there. That might be what I end up having to do. We'll have to see how everything plays out. But remember, hedges are where you want to lose. Your hedging because, right, you hope that your hedge should cost you a lot less than your idea, right? And so you want your hedge to not work, to not be necessary, and you want your idea to flourish, so that's what I'm looking at. But I just think I keep thinking this and I keep being wrong. I've said it many times and I've never really gotten that final. I got this one that I didn't act quickly enough and they turned it around, because you could see that's a strong reversal candle. But it was getting down there and I'm like, all right, come to Papa. And before I could get the Papa finished, right, look what they did to me, and they brought it all the way back up. And I thought, okay, well, I'll just be patient. And then I'm like, oh no, during this phase, I was like, oh man, I didn't even get all my hedges on, but you get the idea. So I'm still hoping for that real ugly whoosh where they've really got VIX bulls capitulating, and then that's when, after that capitulation, is when I want to start positioning more than I have, and then I'll be fine. Like I said, if I get smoked on that, it's good for all of us, and myself included, right? That I get smoked on these hedges. So that's what I'm hoping for. I'm just trying to be a little more patient, maybe a little too patient. I guess only time will tell. But with the VIX where it is, right, it's probably, let's be honest about it, I mean, it's rallied off of this level clearly many times, and it is relatively low when you weigh it against the last, say, 15 months of activity. So might not be a bad time to start sticking your toe in the water, as they say. But overall, I still think you've got to wait for this market to break. I think I said below Thursday's low or above Tuesday's high, I think it was, in the SPY, and then maybe you'll be able to see what's they're going to start on next. But the news that came out with respect to the jobs report, I don't think that looks good. I think the fact that the probabilities jumped dramatically on that can't be a good thing initially. We have no idea what other news will come out, but you would think the futures would be a little pressured on Monday morning at the very least. We'll have to wait and see, of course, as always. But I want to thank everyone for tuning in. I want to wish that and hope that you got something out of the coverage this week, or that could help you out this upcoming week or in the future. And I want to wish everyone a wonderful holiday weekend. And once again, thank you for tuning in.